Okay, so Bitcoin's price is on the move again, but this time it just feels different. The reasons why are kind of hiding in plain sight. You just have to look at the global economy, what's happening in the world, and the technology itself. So what's really going on behind the numbers? Let's dig in and break it down.
$94,000. Wow. That's the number, right? It's what has everyone talking. I mean, after things were pretty stable for a bit, Bitcoin just bloop right past that key level. In figuring out why, well, that's the whole story we're here to tell.
So what's the real story here? Is this just a bunch of market hype, or are there deeper forces at play? Think of us as detectives for the next few minutes. We're going to follow 3 big clues to really get to the bottom of what's driving all this momentum. All right, so this is what we're looking at. This is the main event. We saw a really strong bounce off what looked like a floor at $88,000, and then boom, all the way up to $94K. So let's get into it. Time to unpack clue number 1.
Our investigation starts with clue number 1, what I'm calling the economic engine. And here's the thing. If you really want to understand what's happening with Bitcoin right now, you absolutely have to look at the U.S. economy. Why? Because some of these key reports, they're sending out massive signals to markets all over the world.
All right, so there are 3 big indicators that investors are watching like hawks. First, you've got the manufacturing PMI. That basically tells us how busy the factories are. Then there's the jobs report. Pretty self-explanatory. It shows us how healthy the job market is. And finally, consumer sentiment, which honestly, you can just think of it as a vibe check on the whole U.S. economy.
So take a look at this chart. This is that manufacturing PMI we were just talking about. The reading? 47.9. Now, the magic number here is 50. Anything below that line, well, that suggests manufacturing is actually slowing down, maybe even contracting. And that weakness, that's a super important piece of our puzzle.
Okay, so you might be thinking, why on earth does a factory slowdown in the US matter for Bitcoin? And that's a great question. It all boils down to this one concept: interest rate expectations. See, when the economy looks a little shaky, the market starts to bet that the central bank might actually cut interest rates to get things going again. And if rates go down, holding cash becomes, well, less attractive. That pushes investors to look for better returns somewhere else, even if it's riskier, in assets just like Bitcoin.
All right, that was clue number 1. Let's move on to clue number 2, because this is where things start to build on each other. The U.S. economy, it doesn't exist in a bubble, right? We're talking about the global ripple effect. This is where events happening, literally thousands of miles away, can have a direct and sometimes really surprising impact on the crypto market.
And this is where it gets really interesting. I know it might sound like a bit of a stretch at first, but just think about this for a second. How could something happening in the Venezuelan oil industry have any impact on the value of Bitcoin? Well, the connection is actually way more direct than you'd probably guess.
Okay, so here's how it works. Venezuela, believe it or not, is sitting on some of the world's biggest oil reserves. So any little shift in their ability to get that oil out to the rest of the world, that can mess with energy prices everywhere. And because energy costs are such a massive piece of inflation, whatever happens down in Venezuela can actually directly influence inflation right here in the US.
And boom, here's the final piece of that puzzle. If these global events lead to cheaper oil, and that leads to lower inflation, well, that gives the central bank even more reason to think about cutting interest rates. So just like that weak manufacturing data we saw earlier, lower inflation helps create a really favorable environment for assets like Bitcoin. You see, it's all connected. Okay, so we've covered the big economic picture and the global ripples. But for our third and final clue, we've got to look inward. We need to talk about the innovation factor, because what's actually being built with this technology, that's creating a whole other source of value that has nothing to do with the daily price charts.
And just to give you a sense of the scale we're talking about here, check out this number: $5 billion. And no, that's not the market cap of some new coin. That's the valuation of a single company that's building in this space.
So where does that $5 billion valuation come from? It belongs to a company that's using the Solana blockchain to completely modernize energy grids. This is a perfect example of the tech being used to solve huge, real-world problems. And it's this kind of real, tangible innovation that builds long-term confidence in the whole ecosystem, and that definitely includes Bitcoin.
You know, this really brings us to a super important distinction. You've kind of got 2 stories happening at the same time. On one hand, you have Bitcoin as money, right? A store of value. But on the other hand, you have the blockchain itself, the underlying tech that people are using to build brand new apps and even whole industries. And both of these things, they're both powerful drivers for all this momentum. Okay, so let's recap. We have our three clues, right? We have a slowing U.S. economy, we have these global trends that could lead to lower inflation, and we have some seriously powerful innovation happening inside the industry. So now, let's bring it all home and see how this whole story actually looks on the price charts.
So the key thing to see on the chart is this. When Bitcoin bounced off that $88,000 level, it was doing something technical analysts love to see. It was forming a higher low. All that means is that its most recent bottom was higher than the last one, and that's a classic signal of a really strong, healthy uptrend.
And this is really where our whole investigation comes together. It's not just one single thing pushing the price up. It's this powerful combination of all three clues we talked about: the macroeconomy, what's happening globally, and the real innovation. All of it seems to be adding fuel to the fire for what's been a broader, multi-year uptrend for Bitcoin.
So all this leaves us with one last big question to think about. As Bitcoin gets more and more tied to things like U.S. jobs reports, Venezuelan oil, and crazy tech valuations, is it maybe evolving? Is it turning into something totally new? Almost like a unique mirror that reflects the health of the entire global economy. It's a pretty wild idea, but definitely something to think about.